The European Union has said it transferred the first installment of emergency loans to Greece, allowing the country to repay €8.5 billion of bonds due tomorrow and avoid default. Meanwhile, Prime Minister George Papandreou has said that Greece is considering taking legal action against U.S. investment banks that might have contributed to the country's debt crisis. I spoke to financial analyst Max Keiser to find out how likely a course of action like this is.
I've been reaching out to Papandreou's administration through back channels and working with them to try to help them understand the problem and who they should go after.
How can an initiative like this benefit Greece?
Well, the point I've been making for the past 6 months is this is not a market failure, but a case of financial fraud and accounting abuse and accounting fraud. You can't fix anything until you get to the root of the problem, which is basically fraud. And this is what I've been reaching out to Papandreou's administration through back channels over the past 6 months. They've seen me on various TV outlets explaining what's really going on, and I'm glad to see that they're finally focusing on the true problem.
Now, the Pacific Investment Management Company is talking down the prospects of Europe pulling through its current crisis. Is PIMCO actively trying to freak out European markets?
Yes, absolutely. As I have explained many times, you can make a lot of money very quickly by crashing markets. You make money a lot faster when markets crash because fear has the reaction much swifter and more pronounced than faith. And to create fear, you can make money much more quickly. And of course, PIMCO is bad-mouthing the Greek bond market for purely mercenary reasons. They are financial mercenaries, and they see the Greek economy as a giant piñata that they just whack and shake out as much candy as they can. And there should be as much firewall between PIMCO and the Greek economy as possible. And again, this is what I'm trying to get the Greek government to understand.
A key committee of Euro members of parliament is preparing to vote on a controversial new directive regulating hedge funds and venture capitalists. Now, this legislation will allegedly impose new marketing rules on non-EU hedge funds in Europe and ban naked short selling. Now, the United Kingdom is opposed to this. First of all, I'd like to ask you, do you think that this legislation will go through?
Well, there's a couple of points there. First of all, the problem is not short selling. The problem is naked short selling. And there's a very key difference between those two. Short selling is merely borrowing stock, selling it and hoping that it drops in price so that you can buy it back later and make a profit. And there is a place for short selling. However, naked short selling, which is what we see in Greece, is when hedge funds and other entities are selling securities that have never been issued, that don't exist. It's the same as counterfeiting. So, yes, you must ban counterfeiting. You must ban counterfeiting because it absolutely destroys your financial health. And this is, of course, needs to be completely outlawed, is naked short selling and counterfeiting. And to the extent that this is very interesting, Helen, because every time the government gets close to passing regulations that would curb the financial terrorists, as I call them, they simply stage a huge market crash, as we saw on May 6th in America. In America, they were going to pass a new law that would break up the too big to fail banks. The hedge funds and the bankers on Wall Street crashed the market by 1,000 points in 15 minutes, and then the lawmakers pulled the legislation. They decided not to vote. They decided not to vote in any way to break up the too big to fail banks. So this is the problem. Every time regulators get close to passing new legislation that would remove the power of the financial terrorists, the financial terrorists just simply attack the markets and scare the regulators, who they themselves, by the way, are beneficiaries because they own pieces of these hedge funds themselves. That's part of the problem, is that you don't have anyone in government who's not conflicted. Hopefully George Papandreou, who I believe is a man with integrity, who now understands what's really going on. I believe the wool has been removed from his eyes thanks to some of the reaching out that I've done through back channels into the Greek government. Hopefully now he goes after the true culprits, which are these Wall Street banks that are just simply using the Greek economy is a quick buck mechanism.
So what you're saying is that you feel as if European Parliament may not be able to pass this legislation.
That's correct, because they're being held hostage by the markets. Every time they try to escape, the markets whip them. They beat them.
If it does manage to vote in this legislation, will it help protect the market?
Well, probably not, because the speed at which the hedge funds can invent new financially engineered products is much faster than the regulators have the ability to rein them in. There is only one solution, Helen. There is only one solution to this problem, but I don't think it'll ever be implemented.
And what is that solution?
To rein in the speculators, you raise interest rates, therefore increasing the cost of their capital. This is what the Eurozone should have done last year and the year before. It's what in America should have been done already. It's in the UK, which should have been done already. The only way you can kill the speculators is by raising interest rates. But unfortunately, the politicians are unwilling to take this action because it would cause a huge economic collapse in the short term, but it would set the stage for some recovery. The situation now is because interest rates will remain near 0%. This problem, which could have taken maybe 6 months to a year, is going to last like it has in Japan for 10 years, 20 years, 30 years. It's just going to go on year after year because the speculators are holding the government hostage to keep interest rates low, to fuel their speculation. And every time the government tries to put up a roadblock, because interest rates are low, they create new ways to go around it. So this is going to continue for a while, unless Papandreou hopefully puts some bankers in jail. That would go a long way to stopping the speculative frenzy. But you have to put these guys in jail. You have to put Lloyd Blankfein of Goldman Sachs. You have to put him in a cell next to Bernie Madoff, where he belongs. He's a Ponzi scheme-wielding financial charlatan. Now, Papandreou, if he's going to take on the Wall Street banks, remember, he is now taking on the most radical and violent group in the world, are Wall Street bankers. Keep that in mind. If he's really going after them seriously, he's now going after the most radical and violent group of self-interested sociopaths in the world. And I applaud his bravery. I think it's something he has to do. But keep in mind, he is now tangling with the fiercest tiger in the jungle. So I wish him luck. I hope he succeeds. The history is not great, but he is a brave man.
And that was financial analyst Max Keiser.